So what is section 28 charging section talking about? One, any assessee during the previous year, if he's carrying on any business or profession, and from that business or profession he is earning any profits, then that profits will be chargeable to tax under the head PGBP. Yes, sir. Yes, and the profession as per section 2 clause 38 can include even vocation also, and any from any kind of degree you are earning money, even that also. So any kind of business or any kind of profession you are earning money will be considered will be charged to tax under the head PGBP. Next, where a contract has been entered with the agency, and that contract got terminated, or that contract got modification of terms and condition got done. Because of this termination or because of this modification, any compensation is due or yet to be is due, or it is received, then it is also under the head PGBP. Also, not only the agency, also the business, also from the business, if you are earning any the compensation is being received, any compensation is received from the supplier or anybody because of the termination or modification of terms or conditions, then that also will be considered as income under the head PGBP. Where an association is carrying on any service for the members, and the member is paying to the association some in money as income, then that income will be charged under the head PGBP. Next, there the assessee is doing export, and for this export the government is giving incentives. Government is giving export incentives, such as one, if government is giving an import license, this import license, if you sell it, the or if or government will give you some cash assistance, some money as assistance for the sale or for the export. Next, or duty drawback, where duty drawback to or custom duty or any kind of duty for you producing the goods to be exported, that for that any custom duty or any GST, that duty drawback you're getting from the government, this also will be considered as. Next, if instead of duty drawback you'll get cash, but instead of cash you can also the government will put in a particular passbook called as duty entitlement passbook. What is the benefit of this duty entitlement passbook? It is you can from the whatever tax duty drawback, this from this any import you make, that can be reduced. The best advantage is the import duty also will get string. For example, 1 lakh is the duty drawback, and the new import duty is somewhere around, let's say, 1 lakh rupees. Instead of 1 lakh, because of this you are having this passbook from 1 lakh, it can get reduced to 70,000, 80,000. So this duty drawback passbook you can transfer it to somebody. Also the same also is for duty free replenishment certificate. This is also kind of a certificate where for you making an export, the government will give some 30%, 40% as tax free. This is called a duty free replenishment certificate. If you are making the sale, for this also you will be considered as income. Next, because of you doing business or profession, anybody is giving you, the assessee, a benefit or perquisite. Let it be in cash, let it be in kind, let it be partly in cash, let it be partly in kind, it doesn't matter, it will be considered as income under the head PGBP. Next, a firm is giving partner a salary. This salary, because there is no relationship between employer and employee, this will not be falling under the head salary, this will be falling under the head PGBP. Next, any sum for non-compete fees. What is, I did not write here, also this is also called as, that is non-compete fees, where you see a competitor, you are telling the competitor, listen, I'll pay you, we'll enter into an agreement, then you should not work, you should not enter into this industry, or maybe for 5 years, for some limited period, or never at all. I'll give you some 30 lakhs to 40 lakhs. So if you receive that income, this will be called as income under the head PGBP, or two-person are entering into an agreement that, listen, any kind of patent, know-how, or any intangible asset, trademark, copyright, this you will enter only with me. This you will enter only with me, not with any other else. Yes, yes. And any compensation received for multilateral fund for Montreal Protocol on substance that depletes ozone layer under the United Nations Environment Program. This is in accordance with the government. So government regarding the ozone layer, where you are what you are getting compensation for this. For this also will be considered under the head PGBP. Next, any amount received under key man insurance policy, whether the employee is getting, or whether the legal representative is getting, or the company is getting, who is getting the the insurance sum received when maturity or surrender or at the time of death, who is receiving it? For them, it will be come under the head PGBP, income under the head PGBP. Also, if they are getting bonus, also who is getting the bonus will for that also will be taxed. Any stock in trade, if you convert into capital asset, any stock in trade you will convert into capital asset, this the amount of fair market value will be charged under the head PGBP. Next, capital asset under section 35 AD, any capital asset for which 100% deduction you got for, under section 35 AD, that got transferred, demolished, destroyed, or discarded, and you got some X amount of money for this, whether in cash or in kind, this will be completely 100% whatever amount you are receiving, or whatever kind you are receiving, the value that you will consider as income under the PGBP. Next, even speculation business. No, our normal business is different. Speculation business is different. Both will be coming under the PGBP, but you have to calculate it separately. Why? Because speculation business, you can set off only in the under the speculation business, and also profit. If you have speculative loss, you can set off only under profit of speculative business, and also it can be carried forward for 4 years. That's the reason. And what is speculative business? Where let it be commodity, let it be stock, or let it be shares, this you are settling it other than by way of actual delivery. You are not getting any commodity or shares or stock, but without delivery itself, within 1 day, what are you doing? You are sorry, you're doing it, yes or no? Yes. So in generally, what is the speculation business in one single line? Intraday. Yes, intraday is the speculation business. But what will not be considered speculative business? If you're trading the shares, if the principal business itself trading the shares, or the main business itself trading the shares, or banking company, or the company is the banking company, or the company is the main business is lending and borrowing, if they are doing this speculative business, it will not be coming under the head speculative business. Yes. And for suddenly for you safeguarding the loss, suddenly there's a fluctuation, big price fluctuation. For safeguarding that, you are what, you're selling it that day due to any price fluctuation, such as raw material, stocks and shares, or forward such as forward market method, future and option. Yes. Next, non-speculative business. Following are also called a non-speculative business. One, any agriculture commodity derivatives for which it is not chargeable to TTT, or you are trading in a recognized stock exchange, whether derivatives or commodities, whether in SEBI registered dealer, SEBI registered sub broker, and also its intermediaries, and for which CTT is chargeable. This also will be considered as not a speculative business. Yes or no? Yes. Next, income under the, so these are the businesses where all these are different. All these, the first one is the most important. What? If you are doing business, if you are gaining profit and gain, this will be coming under the head PGBP. So for you to calculate this profit or gains, what do you have to do? You have to see section 49. What? Income under the head PGBP, how will you compute? As per the provision of 30 to section 43D. Yes. So that there are deductions. What are the deductions? section 30 to 37, section 40 and section 40A and all we have to see right now. Yes. So what is section 30 talking about, sir? Regarding building, the rent, the repairs, the insurance and the municipality tax. Regarding that, they are talking about in section 30. First, rent paid, where if rent is paid, then if there should not be any notional rent, which is the assessee should be paying rent, actual rent, so that he can never be a owner of that particular building. He should be a tenant. Yes. So either the partner, if it is a firm, assessee is a firm, even partner can give his building and assessee can pay rent, or if other than partner also he can pay rent. So whatever actually paid, what is actually paid is allowed as deduction. What about repairs? If the assessee is a tenant or if assessee is the owner, revenue repairs will be allowed as deduction, whereas capital repairs will not be allowed as deduction. And what about municipal taxes? Even municipal taxes, even if you pay to the foreign government, it will be allowed as deduction. How about insurance? Insurance as well. Yes, whether the assessee is the owner or the tenant, it doesn't matter. And it should be used only and only for the business or profession. If the building is used for personal purpose, what is it will be calculated based on the proportion. What is the proportion used for personal purpose, that will not be allowed as deduction. Only what is used for business or profession would be allowed as deduction. Yes, sir. What is section 31? Repairs and insurance of plant and machinery and furniture. Yes or no? Revenue expenditure. Revenue expenditure where the assessee is a tenant or where assessee is the owner will be allowed as deduction, but as capital expenditure will not be allowed as deduction. Even insurance, the insurance also will be allowed as deduction, but it should be used only for the business or profession. But if it is used for personal purpose, then that personal purpose will be disallowed. It should not be allowed as deduction. Yes or no? Yes. And why are we doing depreciation as per section 32? The value of the capital asset to diminish, we reduce, we are doing depreciation. Yes. So how can an assessee claim depreciation? Yes. For this, what are the conditions? First condition, assessee should be the owner of the asset. Second condition, the asset should be used for the business or profession. Yes or no? Regarding assessee being the owner, should it be registered? It is a mandatory. No. Even if he is a beneficial owner, it doesn't need he should have control over that asset. Next, what about lease? Who is the owner, which is the lessor, will be claiming the depreciation. But in case of hire purchase, who is making the payment? Because at the last payment only he will be holding the asset. Still, the hire purchase, the person who is making the payment will be allowed deduction. What about asset used for business or profession? It should be put to use. Yes or no? And it should be used only and only for business or profession. We know that. Put to use can be using it for ready for use. We did not do for put to use, but we are ready for use. Yes, ready for use only in three situations. One, standby equipment, fire extinguisher or emergency space. Apart from that, it should be put to use. Now you will see whether it is put to use for 180 days. It is put to use for 180 days or not. If it is used for 180 days, then yes, it is full rate of depreciation. You can go for it. But if it is less than 180 days and you have purchased it during the previous year, then half rate only will be get. But you put for less than 180 days and in the preceding previous itself you purchased it, then you can get full rate of depreciation. Sir, yes or no? Yes. What are the different class of assets? There are 4 different class of assets. What are those? One is building, next is furniture and fittings, next is plant and machinery, and next is intangible asset. Building. Building, there are three kinds of depreciation rate. One is for residential purpose, which is 5%. Next is commercial purpose, next is which is 10%. Next is temporary wooden structure, which is of 40% depreciation rate. What about furniture and fittings? One single rate 10%. What about intangible asset? One single rate 25%. Now the depreciation rate for plant and machinery, generally it is 15%, but this is not used for the motor car is not used for hire. It is not used for the purpose of hiring. In that situation, if it is acquired during 23rd August 2019 to 31st March 2020 and it is put to use on or before 31st March 2020, then it is, what is the depreciation rate? 30%. Otherwise it is 15%. Now which is put on hire, such as lorry, motor bus, motor car, taxi, which is used for what business hire during the period between 23rd August 2019 to 31st March 2020, and it is put to use before on or before 31st March 2020, then the depreciation rate becomes 45%. Otherwise it is 30%. Yes, and for rubber and plastic good factories where they are using molds, it is 30 percentage, and goods or plastic used for refills, the containers of those using for refills, it is 40 percentage. Aeroplanes, aero engines, it is 40 percentage, and your control equipment for pollution, water or solid waste or solid water recycling or resource recovery system, it is 40%. Semiconductor covered in the integrated circuit, it is 30%. Life saving medical equipment, it is 40%. Plant and machinery acquired and installed on or after 1st September 2022 and it is put to use. And what kind of plant and machinery? Water supply project or water treatment project for infrastructure facility, it is 40 percentage. Energy saving e-vehicles, windmill on or after 1st April 2022, any device regarding the mill will on or after 1st April 2014, it is 40 percentage. If windmill before 1st April 2014, it is 15 percentage. Computer and computer software, 40 percentage. Books which is used for carrying on the profession or lending in the library, it is 40 percentage. Ships, 20 percentage. These are the depreciation rate. As much as possible, try to remember. Yeah. Next, block of assets. What do you mean by block of assets? Two conditions should be satisfied for you to have the having the same block of assets. One, it should be of same class of asset, either building or furniture and fittings or plant and machinery or intangible asset. This is the first group. In the first group, it should be one group. Next, the rate of depreciation should also be the same. Yes. So regarding furniture and fixings and intangibles is the same rate. So this will be falling on the same head. Furniture and fittings separately, intangible assets separately. But a plant and machinery building, there are 2-3 situations. Yes, plant and machinery has lot of depreciation rate. So if it was same plant and machinery having same depreciation rate, it will be falling on the same class of assets. Yes or no? Same block of asset. Yes. Yes. Plant includes vehicle, ship, scientific apparatus and surgical apparatus and all used for business or profession, but it does not include, plant does not include livestock and tea bushes. Yes sir. And land and goodwill will not form part of depreciation. Yes. Sir, what is computation of WDV? How will you compute WDV? So WDV is for the actual cost of the asset, so that you can, with the help of this actual cost, you can calculate the depreciation with the depreciation rate. Yes or no? So for you to calculate this WDV, first you have to see whether we have to first categorize a block of asset. So it is within one block of asset. So let's say, what is a block of asset? It should be in the same class of asset. Let it be building, furniture and fixtures, plant or machinery or intangible asset. And second condition is that it should have same rate of depreciation. So if this is there, it is in the same block of asset. So in the same block of asset, you have to see the opening value of that particular block of asset. Now opening balance of the block of asset. Second, during the previous year, did you purchase any asset from the block of asset, and did you put to use during the previous year. You have to see, yes. And did you spend any money? Did you spend any, sorry, did you transfer or discard or demolish or destroy it? You have to minus then the balance will be the WDV for the purpose of depreciation. From this you have to calculate depreciation at the prescribed rate. Closing WDV will come into the picture. So yes or no? Yes. A simple example, opening WDV is 5 lakhs. You purchased 1 lakh, 1 lakh, you purchased 1 lakh and 1 lakh, and you purchased building also for 1 lakh. Yes, and so calculate this depreciation. How will you calculate? First, we will see the block of asset. Plant and machinery having 15% and building having 10%. So there are two block of asset. So opening WDV, building it is 5 lakhs. There is no opening WDV for building. Then purchases, two for the value of 2 lakhs you have purchased it. You do this. Then building 1 lakh you purchased it. Amount is 7 lakhs and 1 lakh. Now depreciation. How will you calculate depreciation? Yeah, you opening WDV and purchases, if it is 180 days or more, full rate of depreciation, and purchases made during the previous year and it is less than 180 days, you will take half rate of depreciation. Yes or no? That's how you will do the calculation. Yes or no? Yes. And where you are making the sale, where you are making the sale, and it is in a if it is in a situation where the sale is more than, the sale value is more than the opening WDV and the actual cost of the new assets total. So in this situation, the WDV will become nil. If WDV is nil, no depreciation is allowed, or there is closing WDV, but the entire asset is transferred, entire asset is sold, then also it is considered as WDV is nil and no depreciation is allowed. No depreciation is allowed. Yes, if you want, you can see the example. Example 1 and 2 is talking about 1 and 2 is talking about all the assets transferred. Example 3, this particular left hand side example 3 is talking about if the sale value is more than opening WDV and the purchases. So if you see the question, you can easily understand. So if you see opening WDV and the purchases is 5 lakhs plus 3 lakhs, and I have transferred it. I have transferred it at 10 lakhs. Sale I took say 10 lakhs. So but I have transferred all the assets at 10 lakhs. So the value of 5 lakhs plus 3 lakhs. Now because it is only 8 lakhs, I am restricting to 8 lakhs. So the WDV becomes nil, no depreciation, but short-term capital gain will arise. Short-term capital gain will arise because sale value is more than the opening WDV and the purchases. Here, opening WDV and purchases is 8 lakhs plus 2 lakhs, and all assets are transferred, but at the value of 6 lakhs. At the value of 6 lakhs, yes. Still WDV will be nil because all assets are all assets are transferred. Yes, yes, and short-term capital loss also will come into the picture. Example 3, opening WDV and the purchases is 10 lakhs plus 10 lakhs, 20 lakhs, and the asset you have purchased on a particular date is 30 lakhs. One asset, one particular is done. Not all the assets are transferred, but it is the sale value is more than, sorry, the sale value is more than opening a WDV and purchases. Because of this, this will be nil. Because of this, the WDV will be nil and no depreciation. You have to calculate the short-term capital gain. Yes. When will you calculate additional depreciation? 1. The company should be carrying on the business of manufacturing or production of article or thing, or generation, transmission or distribution of power, or printing or publishing. If this is the business company is carrying on, the assessee is carrying on, and during the previous year they have acquired and installed the plant and machinery. then in this situation additional depreciation will come. And but plant and machinery, if it is a second hand plant and machinery, or it is installed in the office premises, guest house, or residential accommodation, or some office appliances or road transport vehicle, this will not be considered as this. For these plant and machinery you will not get additional depreciation. Yes, if it is used for 180 days, 20% is the additional rate of depreciation. And you are using it for less than 180 days, then 10% is the rate of depreciation. Remaining 10% in the next succeeding previous, in the balance 10% in the succeeding previous year, 10% you can claim. So yes or no? Yes. So example, in 2019 I have purchased and put to use for 180 days. So I will get for this particular normal depreciation also I can claim, and additional depreciation of 20% also I can claim. Yes, yes. But in 2020, can I claim additional depreciation? No. Only during it is, if it is 180, only one time you can claim 20%. Then in 2020, only normal depreciation you can claim, not additional depreciation. And next, in 2025, I have purchased and put to use for less than 180 days. Then what? In 2025, I will claim normal depreciation. Along with it, I will claim additional depreciation because it is less than 180 days. How much additional depreciation I can claim? Only 10%. And in the next year, which is 2025, next year is 2026, I will claim, of course, normal depreciation also I will claim, and 10% additional depreciation. Balance 10% I will claim. Yes or no? Yes. Unabsorbed depreciation. What is unabsorbed depreciation? Company has to claim depreciation from the profit, but there is no profit. That is called as unabsorbed depreciation. This you can carry forward. This because if you are unable to set off during the previous year, you can carry forward, and you can carry for unlimited period. There's no like only next year you have to set it off. Unlimited period you can, but if you want to set it off first, you have to set off the brought forward business loss and also current year depreciation. For example, 2025, let's say 2024, let's say 2024 unabsorbed depreciation is there in 2020, and plus some brought forward business loss is there in 2025. First current year depreciation I have to do, then this brought forward business loss I have to, is there any remaining, then only I have to take this unabsorbed depreciation. Yes or no? Yes. Why? Because brought forward business loss can be carried for 8 years only. Yes. And this unabsorbed depreciation you can set off under any head, not only in PGBP, not only in the business head, any head but except salary. And for this you don't have to do this filing and all. You have to file the return of income, then only you can you can claim depreciation. Nothing is required like that. Next, terminal depreciation. What is terminal depreciation? First, the assessee who is engaged in the business of generation of power or generation distribution of power, they can claim depreciation either in SLM or WDV. Generally, only you can claim only in WDV. But for a generation of power or generation distribution of power, the income tax people are saying you can do either SLM or WDV. If SLM you're doing good, generally you can go for SLM, but once you shift to WDV, you can never go back to SLM. Once you shift to WDV, you can never go back to SLM. Yes or no? For claiming WDV, before filing the date of return, this date before that itself you have to exercise this option. Yes sir? No. You choose SLM. You're choosing SLM. Okay, if you're choosing SLM, then asset, if it is sold, discarded or destroyed, if this particular sale, the asset, in the first year itself you are selling, or the asset got discarded or destroyed, terminal depreciation will not come into the picture. Second year, third year, fourth year, not the first year. Second year, third year, fourth year, fifth year. If this asset is sold, and selling price is less than WDV, so what for terminal depreciation to happen, you should not sell in the first year, you should sell in the second year or third year, fourth year, whatever it is. And this is the first condition. Second condition is there should be a loss. Selling price should be less than WDV. then only terminal depreciation will come into the picture. So WDV minus selling price. What is the amount that will be charged to profit and loss account as expenses? Yes, sir. But then what is balancing charge? If the asset is sold and profit comes, how will profit come? The selling price is more than WDV. Then in this situation, the selling price minus cost of the asset, will be considered as capital gain, and whatever balance amount is there, that will be considered as business income. For example, let's say the actual cost is 100 rupees. Now, and WDV is 80 rupees. And I'm selling it in the third year. If I'm selling it in the first year, there were no terminal depreciation. I'm selling it in the third year. Yes, WDV is 80 rupees. But the sale I'm selling it for 77. Is it a loss? Selling price is less than WDV, yes or no? Yes. This loss I can, this is a terminal depreciation, and I can give deduction. I can claim deduction in the profit and loss account. In the expense column, I can do this. Yes. Next, in the third year, I am selling the asset and I'm selling it for 94 rupees. Tell me, is that terminal depreciation? No. Why not a terminal depreciation? Because sale price is more than WDV. It is a gain, not a loss. Then in that situation, what you have to do? The balancing charge. Sale price is more than W, the difference will become income. It will be in the income side, balancing charge. Now third situation where sale price is 120 rupees and WDV is 80 rupees. In this situation, because actual cost was how much? I told you actual cost was 100 rupees. It is more than the sale price is more than actual cost. So the difference 120 minus 100 will be charged to short term capital gain. The remaining 20 and 40, that only will be the remaining 20 rupees. 20 rupees I have put it in short term capital gain. The remaining 20 rupees I'll put in the balancing charge as income. Sir. Next, expenditure where you are directly relating to the acquiring of the asset, where you are purchasing the asset. So what will be the actual cost? First, for how much money you have put for purchasing that asset? That is the cost of the asset plus any money borrowed for purchasing that asset. So interest. What is the interest on that money borrowed? That you will add. Loading and unloading charges, that you will add installation, freight, insurance, trial run or test run expenses, tax and duties. If input tax credit is not available, you cannot claim this tax and duties. So if input tax credit is not available, you should add. And if the government gives any subsidy, you have to reduce. And because of this trial run, you sold that particular asset, then what and all sale price you got, that also have to be reduced. This is your actual cost. Sir. Yes. And if you have used for scientific research, now you are using that scientific research for in the business, the actual cost will be nil. The reason is, for scientific research, 100% deduction will be claimed. For let it be revenue expenditure, let it be capital expenditure, you'll claim 100% deduction. Yes. So that's the reason actual cost is nil. Next, inventory, you're converting into stock in trade, and that particular capital asset you are using for the business or profession. We saw that actual it will be in the fair market value. This will be in the income side. This will be the fair market value as per section 28. Yes. Even the actual cost also will be fair market value on the date of conversion. If asset is acquired by way of gift or inheritance, then in the previous owner, what is the WDV that will be considered? So which means notional depreciation you have to calculate. Actual cost minus what is the notional depreciation. You have to calculate whether he did no depreciation or not. It doesn't matter. You have to calculate. For example, he purchased it 5 years back. So 5 years back, what was the cost he purchased minus 5 years depreciation? You have to calculate. That is the actual cost. Next, asset acquired. I'm acquiring the asset so that I can claim more depreciation. In this situation, assessing officer only will determine. But for this, he needs the approval of joint commissioner. Next, I have sold my asset. I'm purchasing that sold asset. I'm repurchasing that transferred asset. Then in that situation, what was the WDV when I sold him, and what is the repurchase price? Whichever is lower, that will be considered as actual cost. Next, if I have sold him, but I am taking it back, but in case of lease, I'm taking as lease. Then what is the WDV of transfer? When I sold him, what was the cost? What was the cost that will be considered? Yes or no? Yes. Next, actual cost on which deduction as section 35 AD is done. What is even for section 35 AD, capital asset 100% deduction you can claim. The asset itself 100% because you got already you claim 100% deduction. Actual cost you cannot claim depreciation for this. Actual cost is nil. Next, I'm mm, other than building, I am using it for private purpose, and then later on I'm starting to use it for business purpose. Actual cost is what is the cost of asset, that will be the actual cost. But in case of building, I have used the building for private purpose, and now I am using it for the business purpose. So what is the cost I purchase, what is the purchase price minus notional cost minus notional depreciation till I'm using it for the business purpose. That will be taken into consideration. Next, asset acquired outside India and assessee is a non-resident. In this situation, cost of the asset minus notional depreciation. The same bow. How ninth point we did, the same way you have to do the calculation. Next, if depreciation, if depreciation, sorry, if the if there is a succession of business, if there is a succession of business, such as firm to company, private company or unlisted public company to LLP, proprietorship to company, amalgamation or demerger to company or cooperative society. If this succession happens, how should we give it to the predecessor, or should we give it to the successor, the depreciation? So for this, first, example, firm is converting into company on 111. Yes, first you have to do is forget about the or the succession to the predecessors. You have to forget all about this. Normal, do the normal depreciation calculation. So normal, if you do the normal depreciation calculation, 10 lakh will come. From this 10 lakh, you have to bifurcate. How you will bifurcate? With the help of number of days. From 1st April to 31st of October. Because first 11 only I got converted for 1/4 to 31/10. Firm well is having 214 days. Company from 1/11 to 31st March, it is having 151 days. So 10 lakhs on the based on the number of days I will calculate. Sir. This is how you have to do. Sir, one more point. No space. Sir, I'll write here. I hope you are also having space. In this actual cost first point, you too can write. I forgot to write. So note, payment of capital asset exceeds rupees 10,000, and payment plus payment is not made by cash. Mm, mm, Sorry. Payment not paid by of account pay check ECS or debit card, credit card, NEFT, RTGS, UPI transaction, IMPS or Aadhaar Pay. So that is basically I can say here I'm saying that if it is made by cash or bearer check or crossed check. In this situation, what will happen? It will not be included in the actual cost. So what is this, sir? If the payment is exceeding 10,000, if the payment is exceeding 10,000, and I am making payment, how am I making? I'm not making payment by account pay check, ECS, debit card, credit card, NEFT, RTGS, UPI, IMPS. So if I'm making payment like this, no problem. All this way, I'm doing it, no problem. But if I'm making payment by either by cash or bearer check or cross check. If I'm making payment by cash, bearer check or cross check. So first condition, payment of the capital asset is more than 10,000 and I'm making by payment by cash, bearer check or cross check. Then this capital asset will not be included in the actual cost, which means actual cost will be nil. Because if I'm not including this amount, whatever and all amount as in the actual cost, if our actual cost is nil, no depreciation. So here, what are they trying to do? They are restricting. They are restricting to make payment by way of these transactions, cash, bearer check, or cross check. Now, so those who do not know what is cash, everybody know what is cash. What is bearer check? It's a normal check. Normal check. Okay. This, for example, somebody is giving this check to me. I can also, I can write give this check to somebody and I can just transfer it. So this check can keep on get transferred. Yes. So this is called as bearer check. But what is cross check? In this this is a check. Left hand side two strikes will be there. Left hand side two strikes will be there. Sir, this is called as cross check. This is called as cross check. Okay. And this will be deposited in the, you cannot get cash from this, you cannot go deposit, no. Yeah, for this who is giving it, who they have to deposit, they have to I'll give it, somebody is giving me, I will give it to the bank and the I have to give it to the bank will deposit in my account, the bank will deposit in my account. This is called as cross check. Now, what is this account paycheck? What is this account paycheck? There will be here. It will be in the line, in the in between line. It will be written account pay. In the in between line, it will be written account pay. So, which means if it is written account pay, then in whose name it is there? In whose name it is there? To their account only it will be credited the amount. This is called as difference between cash check, bearer check, cross check, and account pay check. Okay. So you guys anyway knows. You guys study this negotiable instrument and all. So sorry. So this is called, so if the payment is more than 10,000 rupees and you make payment by way of cash, bearer check, cross check, then this will not be included in the actual asset, which means the actual asset will be nil, no depreciation. So what is section 35AD, sir? Specified business. So what and all are the specified businesses? One, laying and operating cross country natural gas pipeline. What? Across the cross country, yes or no? Yeah, and this also includes storage facility as well. Next, setting up of chain facility for what? For agricultural, forest produce, meat products, poultry, dairy products, marine product of horticulture, apiculture, processed food items. For this, if you are able to set up cold chain facility, or for agriculture produce, are you able to set up and operate a warehouse for that is also a specified business. And if you are able to build and operate a two-star hotel in India, or if you are able to build and operate a hospital for 100 patients, or if you are beekeeping and producing honeys, or developing and building housing project for what? Two kinds of one is for slum redevelopment, and next is affordable housing, which is framed by the central government and notified by the Central Board of Direct Tax. And production of fertilizers in India. Next, setting up and operating warehousing facility for storage of sugar. Setting up and operating inland container depot and container freight station. Setting up and operating semiconductor wafer fabrication manufacturing unit. And business of development or maintaining and operating, or developing, maintaining and operating for what? For new infrastructural facility. These are the following specified business, and for this specified business, if you incur any capital expenditure which is wholly and exclusive for the specified business other than land, purchase of land, goodwill or financial instrument, then it is deductible. It is deductible also if prior to the commencement of business, if you are spent for the specified business and in the books of accounts have you capitalized on the date of commencement of business, then even before the commencement of business, what and all capital expenditure you have incurred, or that will be allowed as deduction in the year of commencement of business. Yes or no? Yes. For individual HUF, AOP, BOE, you have to choose old tax regime, and company you have to opt out of section 115 BAA and 115 BAB, which is 22% and 15%. You cannot claim, you cannot take that rate depreciation. You have to take 25% or 30%. Yes or no? Yes. Next, expenditure by specified business, where the payment aggregate in a day, if it exceeds 10,000, and what kind of payment you are making, either by cash or bearer check or cross check, then this particular capital expenditure you cannot claim deduction. So which means you should pay out of account pay check, account pay bank draft, electronic clearing system, or prescribed electronic mode such as debit card, credit card, UPI, RTGS, NEFT, BIMA. Yes. And for any particular previous year, if you have claimed section 35AD, then for the same year or for any other year, you cannot claim chapter 6A deduction and also section 10AA. But for this to be for you to claim deduction, you have to follow the fact that you should not set up a specified business by splitting off or reconstructing of existing business, or you should not use plant and machinery of second hand, which is second hand plant and machinery, you should not use it. But there is an exception. What is the exception? If you are transferring this to which is you are purchasing this specified second hand plant and machinery for the specified business, and the total value of plant and machinery from which this particular plant and machinery is only 20% of value, it should not exceed 20%, then it's okay. 20% value, up to 20% value, it's okay. And next is, if machinery, plant and machinery is used outside India, and any person is used outside India, now you are bringing into India, you are importing it into India, and prior to installation you should never have used in India. Only after installation only you should have used, and no depreciation is allowed for this deduction in India. Then you can claim. So what? One, any other than assessee, any person has used outside India, then imported into India. Before installation, he should never have used it, and yeah, no depreciation also should have been claimed prior to installation. If these four conditions are satisfied, you can take second-hand plant and machinery deduction under section 35 AD. Yes or no? Yes. And minimum how many period you should use this capital expenditure under section 35 AD? How many years you should keep this capital expenditure in a specified business? Minimum 8 years. But what if you transfer it? If you sell it to somebody, if you sell it to somebody else, then what and all, what kind, how much amount deduction you claim, that doesn't matter. What is the sale price that will be taken place? What is the sale price that will be considered as income? That's it. But if you transfer from specified business to other business, if you transfer from the specified business to non-specified business, and if you have claimed deduction under section 35 AD, then amount of deduction claim under section 35 AD minus notional depreciation till as if no because why are we saying that as if no depreciation under section 35 AD is allowed? Reason is the actual cost will be nil. If we claim 35 AD, actual cost will be nil. So no depreciation can be allowed. So that here you are saying that yes, now you have transferred it. Now for that the PGBP value will be how much amount you claimed as deduction under section 35 AD minus notional depreciation you have to calculate. Yes. Next. And what will be the actual cost? Now you transfer to non-specified business. For this non-specified business, what will be the actual cost of this capital asset? What is it? How much cost is incurred for that asset minus depreciation, minus notional depreciation? That should be calculated. Yes or no? Yes. And if there is a loss, if there is a loss in this specified businesses, can we set off against any income? No, only and only against specified business only you can set off. Yes or no? For this, you have to file your return before the due date. Then only you can claim this set off. Yes. Next, what is preliminary expenses, which is mentioned in section 35D? Before commencement of the business, you are for setting up this new business, or after commencement of this business, you are trying to extend the existing business or expand it. For that, you need to incur some expenditure for setting up this new business. So that either it should be an Indian company or resident non-corporate assessee. So he should not be a non-resident. He should be a resident. Then he can claim deduction. Then he can claim deduction for the expenses. Yes. So he can claim deduction for 5 equal annual installments. For let's say the preliminary expense is 1 lakh. So 1 lakh divided by 5, how much? 20,000. 20,000 for 5 years he can claim deduction. Yes or no? And that too, there is a limit. He cannot. What is the expense he cannot claim deduction? There is a limit. If he is a resident non-corporate assessee, then eligible expenses are 5% of the cost of the project, whichever is lower. But where if he is an Indian company, we have to see 5% of the cost of project or 5% of the capital employed, whichever is higher. This amount or eligible preliminary expenses, whichever is lower, you should take. Yes. So what is this cost of the project? The fixed asset. Companies fixed asset is the cost of the project. And what is capital employed? Issued share capital, debentures, and long-term borrowings. Yes, sir. Now, this eligible expenses, not any expenses incurred before the commencement is not called as eligible expenses. There is a list, preparation of two kinds of report. One is feasibility report. Next is project report. Two kinds of surveys, market survey or any other survey. Next one, engineering services. Engineering service related to the business. Next, legal charges. For what? One, for drafting the agreement. If it is a company, drafting and printing the memorandum and article of association. And regarding company, for registration of under Companies Act, company has to get registered under Companies Act. For that, what expenses? And issue of shares, debentures, underwriting, commission, or charges for prospectors. Yes, sir. Yes. And assessee has to furnish the details before the income tax authority that these are the following expenses, that to when 1 month before the prior to the filing of ROI. And Section 35 DDA, what is it saying? Expenditure of voluntary retirement scheme. This is applicable to any assessee where this particular employer, the assessee, has paid for this voluntary retirement to the employee. So, what is the amount he has paid? For 5 equal annual installment, he can claim deduction from the year of payment. Yes or no? Yes. And Section 35D or Section 35DD, DDA, if there is amalgamation or demerger happens from so before amalgamation or demerger, what and all deduction claimed they would have claimed, but when the amalgamation or the demerger happens, from that on these amalgamated company or the resulting company only will claim deduction. Yes or no? So what is Section 36, sir? Where this is also a deduction section where, for example, 36(1)(1), if companies stock or company stores where you have insured and you are paying premium for this, the year you make the year of payment, you can claim deduction. The year, not accrual system, payment system, where you make the year of payment, in that year you can claim for deduction for this insurance premium on shares or stock or stores. Next, if you have insured for the health of the employees and you are paying premium for this, then in that situation, which year you make payment, for that previous year you can claim deduction. But there is one catch in this: you can only pay premium only by way of other than cash. If you pay by cash, you cannot claim deduction. Other than cash, if you pay, you can do it. Yes or no? Bonus and commission. If you give bonus and commission to the employees, you can claim deduction. Even if you go beyond and make payment above the Bonus Act 1965, it doesn't matter. You can claim deduction, but there is one catch in this. It is subject to Section 43B. What is Section 43B? Sir, before due date of filing of return, you should have made the payment. Yes. So if you made the payment for that particular previous year, you can claim deduction. Next, interest on loan. Interest on loan for personal purpose. If you take a loan and you are paying interest, you cannot claim deduction. Only and only for business or profession. That too, business or profession can be claimed deduction, but if you have taken loan from scheduled bank, public financial institution, state financial institution, state industrial investment corporation, or from MDFC, if you have taken loan from them, you can get deduction for the interest, but subject to Section 43B. What is 43B? You have to make the payment before the due date of filing of return of income. Yes, sir. Yes. But apart from this bank, if you were to take the loan, then you don't have to take. You don't have to take. You don't have to pay interest before due date. Yeah, for claiming the deduction. Next, discounts on zero coupon bonds. What is discounts on zero coupon bonds, sir? Where issue price will be less than the face value. For example, price is 80, face value is 100, issue price is 80, and redemption will be 100 rupees. So which means the difference is there now. This difference is the zero coupons bonds discount, and this you can claim deduction. For this discount, you can claim deduction. For that, the assessee who's claiming should be infrastructure capital company, public sector company, or scheduled bank. They can claim this discount minus issue price. The difference is there. They can claim that. Over a period of time only they can claim. For example, we have taken also an example where issue price is 80, redemption is 100, and issued on 1st October and redeemed on 31st of July. So which means, and that was how many number of zero coupon bonds we have issued? 1 lakh. So 1 lakh into the difference 100 minus 80, 20 rupees for 20 lakhs. This how many periods from 1st of October to 31st of July? How many? What is the period? 10 months is there. So 20 lakhs divided by 10 months, 2 lakh per month. For this previous year, 10, 11, 12, 1, 2, 3. 6 months is there. So 6 months into 2 lakhs. 12 lakhs you can claim deduction for this assessment year 25, 26. Yes, sir. Yes. Next. If the in a calendar month, what is calendar month? 1st January to 31st of March. See, 1st Jan to 31st of 31st. First, not Jan, sorry. What is calendar month? From day 1 to day 31. This is calendar month. In this day, if it is 15 days or more, which means, for example, 15 days means 15 days. Example, I have redeemed on 15th. I have redeemed on 15th. So date 1 to day 15. We have 15 days. So 15 days or more it is there in that particular month. We'll consider this as entire 1 month. We'll consider. We don't have to put into 15 by 30. No. Consider this as entire 1 month. And if it is less than 15 days in a month, then consider this as to be ignored. You don't have to consider that particular calendar month for computing this 20 lakhs divided by 10 months, right? If it is less than 15 days in a month, then 20 lakhs divided by 9 months you will calculate. Sir. Yes. Next, employees contribution. Employer's contribution. Employer's contribution, if it is from an unrecognized provident fund, superannuation fund, gratuity fund, or any other fund, you cannot claim deduction. You cannot claim deduction. You can claim deduction only and only from recognized provident fund, statutory fund, approved superannuation fund, approved gratuity fund, or any other fund. But for this one problem is there, subject to section 43B. You have to claim deduction. You have to claim deduction. If you want to claim deduction, then you have to make the payment before due date of filing of return of income. Section 43B is coming. Yes. Next, national pension scheme. National pension scheme also you can claim deduction, but there is a limit. What is the actual contribution, or 14% of the salary, whichever is lower. For this also section 43B is there, and this salary means not basic salary, dearness allowance, commission, no, only basic salary and dearness allowance in terms. This only, these two components you have to do and multiply it by 14%. Yes. Employees contribution. Employees contribution, you have to see whether have you deposited it before the due date of such fund. For we have taken an example for provident fund, it is 15th of the next month. So the employer have to deduct from the employee's salary, and he has to deposit to the particular fund within that due date. If he has deposited, fine, he can claim deduction. But if he has not deposited within that period, then it will be considered as income. Even though he has deposited, doesn't matter, it will be considered it as income. Yes. Next, we have in our business, animal is used, and animal either permanently it is useless or it dies. So you are trying to get rid of it. Now, if you have received any money, then cost of the animal minus scrap value will be your deduction. If you did not get any money, what is the cost of the animal? You can get complete deduction. Yes, sir. Yes. Bad debts. For you to have for you to claim deduction under bad debts, two conditions should be satisfied. What is the first condition? First condition, the debt where there should be an income. What kind of income? One, it should be related to sales. You made sales. That person has to pay you some money. So there is a debt. That should be situation, or there should be money lending from the bank. What you have taken? Sorry, you have given loan and they have to pay money. So there should be income for you, either by way of sales or by way of lending. Second, this you have to write it off in the in your books. How will you write it off? Profit and loss account too. bad debts, this amount you have to write it off for that particular person. If these two conditions are satisfied, you can claim deduction. You can claim deduction. But for provision for bad debts, you cannot claim deduction. Yes, sir. And income computation and disclosure standards is considered this as income. But as per books of account, this is not considered as income, because we saw only these two, sales and money lending only will be considered as income. But as per income computation disclosure standard, this is considered as income. So it is allowed as deduction, even if you do, because it is not income, you are not writing in the books of accounts. Yes or no? As per books of accounts, it is not income, so you are not writing it in the books of accounts as bad debts. Profit and loss account to bad debts, but still it is considered as income as per income computation disclosure standards. So you can claim deduction. Next, we have claim deduction for bad debts. But later on, some guy who got consciousness or any other consciousness, realized that this is wrong. I have to pay him the money. So he now the assessee is recovering that bad debt. So this is an income. This is taxable in PGBP as per section 41 subsection 4. Yes, sir. Next, promotion of family planning among employees. Assessee should be a company. So the company where for the employees, they are doing family planning. For the employees, they are doing family planning. If it is a revenue expenditure, it is completely fully deductible. But if it is a capital expenditure, for 5 equal annual installments, for example, the capital expenditure became to 2 lakhs. So 5 equal annual installment, 2 lakhs divided by 5, how much? How much? Yes. So that you have to do the, you have to 40,000 rupees, you have to deduct 40,000 rupees. You have to deduct for that particular previous year, and for the next 4 assessment years, you can claim deduction. Yes or no? And let's say you in any of this previous year there is no profit, so it becomes what? Unabsorbed family planning. It becomes unabsorbed family planning that you can carry forward and set off as per unabsorbed depreciation. How you carry forward, and carry forward is unlimited for period, and you can claim set off in any head except salary as per unabsorbed depreciation. This is also applicable for family planning. And sale or transfer, this is same as per scientific research. This is same as per scientific. How did you do scientific research, sale or transfer? It is the same as applicable. Next, securities transaction tax or commodity transaction tax. This it is allowed as deduction, but you have to make sure that this particular is used for stock in trade. If it is used as capital asset, you cannot claim. You on the shares or commodities has to be used as stock in trade. If it is capital asset, you cannot claim deduction. So yes or no? Yes. Then what is section 37? Section 37 is general. Apart from section 30 to 36, if any other expense is there, you can still claim deduction. But for that, section 37 is coming into the picture. There are 3-4 conditions to be satisfied. First, it should not be, there should already, as per section 30 to 36, any deduction you can claim, then you cannot go for the section 37. So no, as per section 30 to 36, this is not covered. This particular expenditure is not covered as per 30 to 36. Next, it should not be in capital expenditure. It should be a revenue expenditure. Second, third, this should not be as per personal expense. It should be for business or profession. Fourth, there should not be any offense, or it should not, what kind of expenditure you are doing, it should not be prohibited by law. If you satisfy all these 4 conditions, you can claim deduction. Yes, sir. Yes, sir. We have given such as gift to employees, puja expense, audit fees, printing and stationery, premium paid on key insurance premium. Here, GST or interest on GST, you can claim deduction. But direct tax or interest or direct tax until you cannot claim deduction. But penalty on GST, you cannot claim deduction. So, let's say dividend also you cannot claim deduction. Here, if there is a breach on any law, can you claim deduction? No, the condition, it should not prohibited by law. But if you have made any penalty on breach of contract, for example, In our class, we took a simple example. I told that in the end of this, let's say I will complete the portion within 4 months or 5 months. 5 months, I told. I took 8 months or 7 months. There's a breach, and as per contract, if I did that, I will pay you some penalty. So this is called as what? This is also a breach, and if I pay penalty, I can claim deduction. So, yes, sir. Yes or no? And you cannot claim deduction for corporate social responsibility, and also advertisement in the newspaper of political party. If you want to do any advertisement, but in the newspaper of the political party where they are carrying on this newspaper, if you are making advertisement there, you cannot claim deduction. If you, other than political parties newspaper, if you do advertisement, you can claim deduction. Yes or no? Yes, sir. What is section 40, sir? In section 40, we talks about few disallowances. Yes, the first disallowance is disallowance regarding the TDS, where the assessee makes any payment, and as per section 30 to 37, it is disallowed. It is allowed. It is, you can deduct you can deduct from the net profit, but but this payment where you are making one, it is you are making payment to a person outside India or to a non-resident, and this is subject to TDS. You have to pay TDS, yeah, and you are, if you have to pay you have to pay to the government TDS, then you have to deduct it before making the payment, and then you have to deposit to the government before due date under section 139 before filing of return of income. So yes or no? Yes. This is what section 40A I1 is talking about. And also, a person you're making payment, if you're making payment to a resident in India, if you're making payment resident to India, on which TDS you have to deduct it, then you have to deduct and you have to pay to the government before due date of filing of return of income under section 139. Yes or no? Yes. So what if you did not deduct, or what if you deducted but you did not pay to the government before due date of filing of return of income? Then if it is the payment is made to the person outside India or to a non-resident, 100% disallowance in the current previous year. And which year you are depositing to the government, that year only the payment will be allowed. That payment, the expense will be allowed. Yes, sir. Yes. So in the year of payment, the deduction can be claimed in the year of payment. Also the same for resident of India. It's not 100%, but it is 30%. 30% it is disallowed. 30% it is disallowed, and it will be allowed in the year of deduction. For example, let's say 1 lakh. 1 lakh you have to pay. 1 lakh you have to make a payment where 5,000 is the TDS. 95,000 rupees you will be paying. 95,000 you will be paying. Yes, and let's say this is in the year, this in November 25. Okay, you have to do the deduction. What is this, November 25? Okay, so in the you have to do the deduction, but you have done the deduction, but you did not do the filing. You have done the deduction, but you did not do the filing before the due date. You have made the you have deposited to the government on November 25. This is after due date of filing of return of income. So in the previous year you will not get deduction. In the previous year you cannot get deduction. So for example 24-25. So example 1 lakh I took the expense on 24-25. So either it is 100% or 30%. 100% is for person outside making payment outside India to a non-resident. 30% is for a person resident in India. No deduction. And when did I make payment? November 25. This is previous year 25-26. In this year I can claim deduction. I can claim deduction in 25-26. So yes or no? Yes. And also, if salary is payable to whom? To a person outside India or to a non-resident. So if salary is payable to a person outside India and to a non-resident, on which TDS is deductible, then 100% it is allowed as deduction. 100% it is allowed as disallowance. In the current previous year, if you did not deduct, if you either did not deduct or if you have deducted but you have not paid to the government when up to the due date of the TDS payment. What is the TDS payment? For this current month, next 7th of the next month is the TDS payment. With the 7th of the next month, you have to make the TDS payment. Yes, yes. And what if I in the current year it is disallowed? When I make the payment to the government, will it be allowed? No. Then forever it will be disallowed, not allowed anytime. It will never be allowed. Yes or no? Yes. Now let's say this is disallowed. Now due to any reason, as per section 40A1, section 40A1A or section 40A3, I did not deduct or I did not pay to the government. For this, for me it is disallowed. But now TDS, now that for what amount TDS I have not deducted or I have not paid to the government, the pay to the person who I have to make the payment, the pay, he includes this in the total income. He pays tax and he furnishes his return of income. So instead of the payer, the payee pays and furnishes return of income. With this help, payer also along with this furnishes a certificate from a CA in form number 26A that listen, I have to make the payment but payee makes it. So the 100% or 30% deduction can be allowed as deduction. When can this 100%, 30% assessee can claim deduction, which got disallowed. So in the year, but this will be this can be allowed deduction in the year in which payee files return of income. Payee files his return of income. Example, payee in 26-27 includes the TDS amount. Then payer claim deduction when? In 26-27. Why? Because he includes this in 26-27 and he files this in the 26-27. He files his return in 26-27 so that payer can claim deduction. Yes, sir. Actually, in 25-26, he made a mistake of not deducting. Because of this, payee comes to the rescue. Next, disallowance regarding tax. If tax is paid on non-monetary perquisites, of employee, where who's responsible? So what is non-monetary perquisites such as rent-free accommodation, giving car to the employees? Yes. So this tax has to be is the responsibility of employee, sir. But if employer takes it, from his pocket if he pays it, is this an expense which can be claimed? Is this allowed? Is this deduction allowed for the assessee? Because the assessee, the employer, pays it. No, because as per section 1010C, this is an exemption for employee. So this is disallowed. This is disallowed. We also gave the reason why this becomes disallowed. And also in section 37 itself, when we discussed that income tax, if you paid for the previous year income tax, can I claim deduction in the previous year? No, income tax, cess and all, you cannot claim deduction. Yes. Next, if I make payment to a specified person and as per assessing officer he finds that this is excessive or this is unreasonable, can I claim this as deduction is allowed? No, it is disallowed. If assessing officer feels this, it is excessive or unreasonable. Example, no, sir. Why? Okay, I'll come with an example. My sister. I make payment to my sister. Okay. Where let's say I am some professional and I am saying that my sister is an employee and I am paying some 30 lakhs, 40 lakhs as in a year as salary. But if you see in the market, generally it is 15 lakhs. It is 15 lakhs. So as per assessing officer, he says that this is excessive or unreasonable. So what is excessive or unreasonable? The difference, it will be disallowed. So for individual who assesses an individual, their relatives, his spouse, his parents, brothers and sisters, lineal ascendant and lineal descendant. What? These are the specified person. HCF means the members and their relatives. Partner means partner and their relatives. And firm or LLP means partner and its relative. Company means director and relative. AOP or BIA means member and its relatives. Then substantial interest. What is substantial interest? If in a company I'm holding 20% of voting power or 20% or more of profit sharing ratio, 20% or more or profit sharing ratio, then holding and subsidiary. Between holding and subsidiary, these are also specified persons. And among subsidiaries, what is among subsidiaries? The holding company has, let's say, two subsidiaries. So between these two subsidiaries, these two subsidiaries also are specified persons. Yes, sir. Yes. Next, for section 40A3. What is section 40A3 is telling about? Sir, if if a payment is more than 10,000 and that to aggregate, it can be more than one bill. It can be more than one bill. So in payment in aggregate is more than 10,000 rupees, and whether it is revenue nature or capital nature, it does not matter. Yes, so if I am making it to a single person in a single day, I am making to a single person in a single day by what? Either by cash, either by bearer check or by cross check. Then this is disallowed. So how can I claim allowance? You have to make payment either by account pay check, account pay bank draft, electronic clearing system, or debit card, credit card, net banking, NEFT, RTGS, NEFT, IMPS, Beam, Aadhaar Pay, or UPI transaction. You have to make the payment like this, sir. Yes. And if you make the payment like that, then even though you are making more than 10,000 rupees, it's okay. But you cannot make payment by cash, account pay check, cash, bearer check or cross check. If you are making more than 10,000 to a person in a day. Yes. And expense where you have deducted, where as per accrual system, you have deducted, let's say in a previous year. In the subsequent year, you are making the payment. So let's say in 24-25, you as per accrual system, yeah, you have deducted, and in 26-27, you are seeing that okay, I'm making payment, but you made payment more than 10,000 rupees in cash, to a person in a day. But I also claim deduction. Here they are not talking about the deduction, because you cannot claim deduction anyway if you are paying less than 10,000, because you have already paid. But you should not have paid more than 10,000. So this particular amount will be considered as income. This will be chargeable to PGBP, will be considered as income. Yes or no? Yes. This more than 10,000 will not be applicable to one. If I am making, I want some goods. For that goods, what I am doing, I am contacting contacting an agent. Yes, but for me to get for the agent to get the goods, the agent has to pay by cash. So if I pay by cash to the agent, and agent makes the payment, no problem for me. Example, again as I told you, supplier wants cash, and agent is making by cash. Because a supplier wants cash, agent is making payment by cash. Me, the manufacturer, I can give cash. Me, the manufacturer, I can give cash to the agent. Yes, sir. Yes, and also as per Rule 6DD, RBI, LIC, bank, to the government, all these people, if they make payment by way of cash more than 10,000 to a person in a day, no problem. Also letter of credit and bill of exchange. Also is a no problem if it is more than 10,000 rupees. And book adjustment. What is book adjustment? Uh, te- uh, I I have to make pay. I have to make payment to some other person. Somebody has to make payment to me. So let's say I have to make payment 1 lakh. He has to make payment to me 80,000. So I'm adjusting now from I have to finally I have to make payment to him 20,000. Yes, a book adjustment. Next, barter system. If I give him goods and he gives me some kind of services. It is more than 10,000 rupees. It doesn't matter. We are not paying cash. This also will not be a disallowance. And production of cottage industry without the aid of power, without any electricity. If I am making if I am doing production in the cottage industry, then yes. Next, no banking facility in an area. There is no banking facility, so I'm making payment more than 10,000 rupees in a cash. It's okay. Retirement benefits. It is if it is more than 15,000 rupees. If so, employer if he gives more than 15,000 rupees for the retirement benefits, it's okay. If salary is for 15 days or more, and I'm getting more than 10, the assessee is paying more than 10,000 rupees in cash. Why? Because he have been posted in some other place or also in ship. If this is the situation, even though you are making more than 10,000 rupees, no problem. Next, authorized agent or the money changer. If he is giving more than 10,000 rupees in cash for a foreign exchange or traveler's check, it's okay. It's okay. Yes. Yeah. For this and all, it's not a disallowance. So, section 40B. So, what is section 40B, sir? Where the firm, partnership firm or LLP, if they want to give remuneration to the partners, they can give how much ever remuneration they want. But there is a certain limit that can be allowed as deduction. And the amount which is allowed as deduction, that is only will be chargeable to tax for partners as well. Yes, in the PGBP head. Yes or no? Yes. So, for remuneration to partners or firm, if they want the deduction, first there are two conditions. One, the partner should be a working partner. He should not be a sleeping partner. Next, in the partnership deed, the remuneration should be specified that this much so and so amount should be given as remuneration. It should be in the partnership deed. Three, it should not be in a retrospective manner, but it should be in a prospective manner. Yes, before you cannot put a partnership date and beforehand this much X amount of remuneration I'm going to pay. No, forget about beforehand. From the day of partnership date, when you are entering the partnership date and or where you are changing the partnership deed, and in this deed, okay, from what is the remuneration you are going to put, that only will be considered. That is called as prospective say situation. Yes or no? Yes. And what is the limit? And limit is if the book profit is up to 6 lakhs. If the book profit is up to 6 lakhs, then 3 lakhs or 90% of the book profit, whichever is higher, will be considered. And if the remaining, and it is more than 6 lakhs, then the remaining book profit, you will put 60% of the book profit. So what is this book profit? Book profit is net profit as per PGBP, the entire calculation, but you should not consider remuneration, partners remuneration. So if you consider minusing the partners remuneration, you have to add back. And also you also have to reduce you would have reduced current depreciation. Also you should have reduced brought forward unabsorbed depreciation. So yes sir. Yes. And what can partners get interest? Yes. If they have paid any amount as capital, for that they can get interest on the capital. But for that also two conditions are satisfied. One in it should be in the partnership. What is the that he has to get so and so as interest, and also it should not be in a retrospective manner, it should be in a prospective manner. And also the interest rate should not be more than 12%. So let's say they have given 16% as interest, they can give how much ever as interest, but deduction will be 12%. What about if they give 9% as interest? Then 9%, no problem, but it should not be more than 12%. Yes sir. Yes. What is section 43B? Deduction on actual payment. So actual section 43B says in few cases, few situations where it is allowed, if the deduction is allowed, there is a problem. The where you are making the payment, when you are making the payment, you have to make the payment before the due date of filing of return of income under section 139. Yes, sir. So what are the situations? One, any taxes, duties, cess, fees. For example, GSTs regarding any tax or interest you are going to pay. For this, it is deductible as per section 37. Yes, but you have to make the payment before due date of filing of return of income. At least, yes. Next, employees contribution. Employees contribution include statutory provident fund, recognized provident fund, approved gratuity fund, superannuation fund, and any fund as per law, and as well as a new pension fund or national pension scheme. Yes, sir. If this allowance is there, if this for this you are claiming deduction, but you also have to pay it before due date of filing of return of income as per section 43B. And bonus or commission, even if the bonus you are making payment above the limit specified in the Bonus Act 1965, it's okay. You can claim deduction whatever you're paying, but you should have made the payment before due date of filing of return of income. Next, interest on loan. Interest on loan of public financial institutions, state level financial corporation, state industrial investment corporation, scheduled bank, and cooperative bank. All these, if they have from them they have taken loan and they are making payment interest on their pay on loan, they can claim deduction only if they have made the payment before due date of filing of return of income. Yes, sir. And so what if the interest on loan I've converted that interest, after converted that interest on loan, for example interest on loan is 5 lakhs, I have converted that interest into a new loan, can I say that that is considered as a deduction? No, because it is not paid. It is not paid only and only if the new loan which you have made, for that you have paid the installments. For that you have paid the installment, then only you can claim deduction. Otherwise, you cannot claim deduction. Yes or no? And this is also applicable for if that loan is converted into debentures or any other instrument. Just by changing, it is not an actual payment. Only and only if actual payment is made, it will be allowed as deduction. Yes, sir. Next, payment to Indian Railways. If I'm using their assets and for that I have to pay to Indian Railways, I can claim deduction only and only if I make payment on or before due date of filing of return of income under section 139. Yes, yes. And sir, I have made the payment on or before due date under section 139, but as per the law, as per the following laws, there is a particular date, there is a particular due date I have to make the payment. If I did not comply there, can I claim deduction? No. You also make sure that you also pay the, you also make the payment within that due date as per that respective act. Sir. Yes. And next, also there is something called as any person, any assessee where they are paying to micro enterprise or small enterprise as per MSME Act, and for the time payment should be under section 115. So what is micro and what is small? Micro means if the investment in the plant and machinery and in the equipment is up to 1 crore and turnover is up to 5 crores. And small enterprise means investment in plant and machinery and equipment is up to 10 crores and turnover is up to 50 crores. Yes, sir. Then the time limit is on or before the date agreed. On or before the date agreed in the written agreement, you have to see. If it is the date is there, it's fine. But if there is no written agreement, then 15 days. You have to consider 15 days. But the written agreement also there is a problem. What? Maximum 15 days. Maximum 15 days. Sir, example, unable to understand. So the due date. We saw an example also. This, what is the due date? What is the due date? If there is a written agreement, due date is agreed date of payment. Agreed date. What is the agreed date? You enter. You have an in the agreement an agreed date Within this, you have to make, for example, 30th of April or 45 days. When did I purchase on second of March? Second of March. If taken to 45 days, it is 16th of April, whichever is earlier. Maximum 45 days only I should take. So we 16th of April is the date. Yes or no? Yes. Next, so what is section 43A is talking about? If you have purchased an asset from a foreign country and you have taken any foreign loan, or the supplier has given you any foreign credit and you have to make the payment, what, in foreign currency, you have to make the payment in foreign currency, but there is a foreign fluctuation. Let's say we took an $200, yes, taken as 100 rupees, we purchased the asset. Now this 100 rupees foreign exchange changed into 105. So which means 200 into 110. Let's say 110, which means 22,000 rupees. If it gains, or let's say 100 rupees turn into 90 rupees, 100 rupees convert change into 90 rupees, then in that situation what to do, sir? It will be 18,000 rupees. So there will be ups and downs in the payment. So this ups and downs, the client would have the assessee would have, in the profit and loss account, would have mentioned foreign exchange fluctuation, 2000, 3000, whatever is the fluctuation. But can you claim deduction? No, you cannot claim deduction. The gain, the profit and loss will be added to the block of the asset. Yes. Yes. What next? What is deemed income? Any amount or any benefit is taxed as PGBP. When will an amount will be taxed as PGBP? As per section 41 subsection 1, where the assessee has claimed, in any previous year deduction. However, for what? For loss occurred. For example, we took the employee has okay. I think in our class we took that the employee has took some stock or money and ran away. It's a loss, right? It is a loss. If tomorrow this is a loss, we can claim deduction. And in the subsequent previous year, if assessee is obtaining that loss, how he came and gave it back to us. Or expenditure, any kind of expenditure, we claim deduction. But later on we realize that expenditure is not at all required. So we obtained the what and all expenditure, either in accrual concept or in payment concept. If we have made the payment, we got it back. So for the deduction, we are adding back. Yes, it can either be in cash or it can be in kind. It doesn't matter. Next, trading liability, where we claim deduction. What is this trading liability? Purchases. Yes, for this purchases you claim deduction. But later on, let's say you have to make payment in installments, and you found out that it is 15 lakhs, totally 15 lakhs. At the last installment, it turns out that 2-3 lakhs, the product quality is not good. So the supplier has told that it's okay, you don't have to pay 15 lakhs, 12 lakhs is enough. They agree. So how much deduction you got? You made 15 lakhs, but actual payment was done is 12 lakhs. So 3 lakhs is what? Cessation of liability. There is a benefit. Yes or no? That is a benefit. If that is also situation, you have to add back the 3 lakhs. Yes, sir. Yes. Waiver of loan. If the government has waived the loan, it is fully taxable. If you have claimed deduction, you would have claimed deduction, you have to pay it back. Next, working capital loan also. If principal amount, if you would have claimed deduction, you have to pay it back. But whereas interest we saw in section 43B. When will you claim interest? So when will you claim interest as per section 43B? Only and only if you make payment before the due date of filing of return of income, then only you can claim deduction. Yes or no? Yes, sir. And if you did not pay the interest, you will not get deduction. So this is not you did not claim deduction at all. Then it will not be taxable at all. Yes. Balancing charge. What is balancing charge? We saw in section 32, remember, generation and transmission of power. There, if you use SLM method, if you generally you will use SLM method, yes. So if you sold, discard, or demolish or destroy the asset, and sale value, if sale value is less than WDV, it is a terminal depreciation. But sale value, then it will be taken into debit side of profit and loss account as expenses. But if sale value is more than WDV, then what? WDV minus cost of the asset will be considered as deemed income. Yes or no? Yes. Capital, I hope we have also revised when we saw balance charge when we were discussing depreciation concept. Yes, hope you guys remember. Capital asset where you have transferred for what? Where you have already used this in scientific research, and now you are not. This transfer is not for use in the business. You are transferring it to some other person. You are transferring it to some other person. Then what is the sale price or what is the deduction, whichever is lower, will be considered. And if the sale price is more than the cost of the asset, this will be taken to the capital gain. Yes, sir. Yes. And bad debts, we also saw in section when we were discussing section 36 regarding the bad debts deduction, where bad debts you allowed as deduction, but later on it is recovered in the subsequent year. So in the year in which subsequent year you recovered it, it will be considered as deemed income. Sir, what is section 44AA, sir? It's books of accounts. So there are two sets of people. One, non-specified professionals and specified professional. If a person is a specified professional, then you have to see whether his income is 1,50,000 in any of the three preceding previous years. If his income is 1,50,000 in up to 1,50,000 in any of the three preceding previous years, or if he is starting a new business in that previous year, his income is 1,50,000. If that is the situation, what to do? You have to maintain books in such a way that you can compute the total income. That's it. Yes, but if it is more than 1,50,000 rupees, in all of the three preceding previous years or first year of business, then in that situation, you have to prepare in such a way that rule 6F is complied, and you have to maintain this for 6 years. Sir, yes. And if you are a non-specified business, professional, or you are carrying on the business, then whether the assessee is an individual or HUF, then the limit is about 2,50,000 rupees. If the assessee is not individual or HUF, then the limit is 1,20,000 rupees. Say yes, so the limit, as per the limit, if it is for all the three preceding previous years, it is up to that particular limit, then you don't have to prepare the books of accounts. Not required. Very less amount, not required. But in all of the three preceding previous years, if it is more than 2,50,000 rupees, then you have to maintain the books of accounts. You have to maintain the books of accounts. Yes, and in such a way that you are able to compute the total income. Yes. And if you do not maintain as per section 44A, 25,000 rupees penalty would be charged. Who are those specified professions? One, legal, medical, engineering, accountancy, architecture, interior decoration, technical consultancy, and also film artist, information technology, IT, company secretary, CS, director, producer, actor, cameraman, art or music director, lyricist, singer, dialogue writer, dress designer, music director, and editor. All these are the specified professionals. Yes. And as per rule F, if you are more than 2,50,000 for individual HF, and for others more than 1,20,000 rupees, you have to maintain books as per rule 6F. What is rule 6F talking about? The cash book you should maintain on day-to-day basis, and also for the cash balance at the end of the day and end of a specified period. This specified period should not be more than 1 month. You should see what is the cash balance, and journal entry, ledger entry, and also original bill if it is more than 50 rupees, and a carbon copy bill if it is more than 25 rupees. But this carbon copy has to be serially numbered, and a medical professional, if it is a daily case register or inventory case register, has to be maintained. Yes, sir. And when is tax audit to be, who will do the tax audit? You guys in the future, who? Chartered accountants who have a certificate of practice, and for whom you will do tax audit. If you are a specified professional, then receipt is more than 50 lakhs. Then you have to do tax audit. In case of business, if the turnover or gross receipt is more than 1 crore, you have to do tax audit. But if the cash receipt or the cash payment, if the cash receipt or the cash payment during the previous year is up to 5% of the total receipt, both conditions satisfied, then instead of 1 crore, the limit will be 10 crores. Yes, and in case of others, an assessee who claims income under section 44 AD, 44 ADA, or 44 AB, sorry, first let's talk about 44 AD and 44 ADA. The limit is less. The limit you are going less than 8% or 6% or 50% as per 44 AD and 44 ADA, and that income, that particular taxable income is more than basic exemption limit. You have to do tax audit. And section 44 AE, 44 BB, 44 BBB. If it is, you are going for lower than prescribed limit, then you have to do tax audit. Yes, sir. Yes, and you have to furnish the audit report 1 month before the due date of filing of a return of income to the income tax department. And if you fail to do the tax audit, then 0.5% of the turnover or gross receipt or 1,50,000 rupees, whichever is lower, you will be charged penalty. Yes or no? Yes. And what is section 44 AD and 44 ADA talking about? The assessee, whether individual, HUF, or firm, not LLP, should be a resident. 1, 2. If it and the business for 44 AD should be what? He should not be a 44 ADA professional, no agency commission basis business, and also he should not have claim deduction under section 80 IA to 80 JJA, and also not claim deduction under section 10 AA. Yes, sir. This is there. Okay, great. And you should also mainly see a limit. If the limit is should be up to 2 crores, limit of turnover should be up to 2 crores. This limit can be more than 2 crores, which is up to 3 crores. He can claim limit when the cash receipt is 5% of the total receipt. Cash receipt is only 5%. Remaining is bank only. Then he can, for instead of 2 crores, it will be 3 crores. What about 44 ADA? 44 ADA is where specified professional who is a resident individual, resident chief, resident firm, not LLP, and the turnover is up to 50 lakhs, and if the cash receipt is up to 5% of the total receipt, instead of 50 lakh, it will be 75 lakhs. Yes, sir. If this is satisfied for 44 AD, the assessee will charge his income for PGP will be 8% of the gross receipts. But if he can claim 6%, when he can claim 6%, if it is not cash payment, if it is not the cash payment is not made, but bank payment is made within the due date of filing of return of income, he can claim 6%. Can he claim more than 8% or more than 6%? No problem. Minimum say 8% or 6% should be claimed. Yes or no? Yes. And what about 44 ADA? Minimum 50% you should claim. What about, can I claim less than 8% or less than 6%? No. Why? If I claim less than 8% or less than 6%, tax audit, it will go into tax audit. Yes. Next, expenditure. If can I claim deduction expenditure? I claim 8% or 6% or 50%. Can I claim expenditure under section 30 to 36 or a section 40B remuneration to partner or interest? No. Why? You cannot claim. This is completely not allowed. Yes. And also, can once I choose 44 AD, can I choose next time not 44 AD? No. Once you choose 44 AD, you have to stick it for 5 years. You have to stick it for the 5 years. Yes or no? But in between, you choose 44 AB. In between, you choose normal deduction, 30 to 37 deduction. Then in that situation, that previous year and the next 4 years, you cannot claim. deduction under section 44 AD. Yes or no? But for 44 AD, each and every year you can keep on claiming it. Yes, sir. And what is 44 AE? This is applicable to every assessee where they are plying, hiring or leasing the goods carriage, and the assessee should be the owner. And even for hire purchaser who is making the payment to get that property in asset in his name, he will also be considered as owner, and he can also claim deduction. He can also go for section 44 AE. And also, but the how much vehicle should be there maximum in a year? During the maximum 10 vehicles should be there. Yes. And should I put in news and all? Is not there. There's nothing called as put in news. And can I claim deduction under section 30 to 37 in this? There is no deduction to be claimed. But can I claim deduction under deduction for partner's salary and partner's salary or interest? Yes. 40B, that you can do it. Yes. Yes. Now, what will be considered as income for 44 AE? If it is heavy vehicle, what is an heavy vehicle? Gross vehicle weight is more than 12,000 kg, which is more than 12,010. If it is more, remember, more than 12,000, not greater than equal to, more than 12,000. Yes, then 1,000 per ton of gross weight for every month or part of the month. Yes, sir. And in case if the gross vehicle weight is less than 12,000 kg, then 7,500 for each vehicle for 1 month or part of the month. Sir, that's it.